specifically select it. Hello, hello, hello. All right, hopefully that's better. All right, let me know you can hear me now. Okay, sorry about that, guys. Let me start over. All right. I am up this week and next in Kelowna, BC, and I am on vacation outside of my favorite job, which is this one. And so y'all have a chance to uh, see me in my vacation on some. Don't worry, I'm still wearing shoes. Um, so, welcome to week 11 of the Rational Investor School for Trader Development. This week we're talking about liquidity events. The liquidity events, the topics we're going to cover are defining what a liquidity event is. We're going to talk about the different types of liquidity events. We have news events, macro events, micro events. We have kill zones, and we're going to talk about how to identify those in advance and what to do in regards to trading around those. So, to understand a liquidity event, you first have to understand what we mean when we talk about liquidity. So, liquidity, we have the definition here, which is the degree to which an asset or security can be bought or sold on the market without affecting the price. It's characterized by a high level of trading activity. In other words, we get a lot of orders onto the market, and when there are a lot of orders, you can buy or sell larger volumes of that asset without driving the price up or down. There's no specific liquidity formula. There is a acid test that's used. This is what I was just linking to, that you can read more about here on Investopedia. We don't, for the most part, we don't delve into that, and I'll explain why in just a second, but there is kind of an acid test formula that we can use to determine liquidity on a particular company asset. That formula doesn't work particularly well on anything that's not a company, but how we identify liquidity generally is large volumes of orders. We'll see the bid and ask spread become smaller and become narrower. So, if we're looking at something that's evaluated in dollars, we may see a spread move from $30 apart to 30 cents apart, right? That's a clear indication of a point of high liquidity. This comes a little bit back to that idea of an institutional fingerprint when we talk about like those railroad tracks that identify institutional fingerprints. When we talk about the key high with the previous candle being our institutional fingerprints, right, or a key low. Large players will use liquidity events to enter or exit large positions, right? They know that they're not going to get fills without moving the market price at times of low liquidity. And so they'll look for these high liquidity events to unload their short or long positions. So it's a very volatile time. Some of the things that drive that is fear or greed of an upcoming event, right? A new unknown fundamental that can drive price into that event. And this is where we get into the idea that institutions will often drive a lot of this buy the rumor, sell the news, or sell the rumor, buy the news concept, that when news is expected to be negative, right, price expected to go down, prior to that event, very often you'll see the price of that asset driven upwards. This is largely so that the larger institutions can get a better sell price, right, because they're getting out of the position. You'll see the opposite when it comes to positive news. You'll see the price driven down just before positive news very often. And it is important to understand that the market is a forward discounting mechanism. And that's that concept that we have the idea that you'll hear in the news, you'll hear people talk about something having been priced into the market already, right? When we have an expectation of a negative, that price will, like I said, it'll move up just before the event, but overall, we'll see in advance of that event, price will move down, right? So we'll see it move down, dip up, and then sell. Or if it's a positive event, we'll see price come up, dip down, and then go up, right? Um, this is very, very common. So, all right, types of liquidity events. So, liquidity events come in two primary categories. We talk about news events and we talk about kill zones. News events themselves can break down into two categories. There are macro events and there are micro events. So micro events have to do with a particular asset. In a company, you will see like an earnings report, right? That's a micro event. It is specific to that company. And then you'll see macro events, changes in interest rate or tariffs, right? To bring up recent things, right? These both affect larger swaths of the market, not just individual companies, right? And it's also important to note when we talk about sell the rumor, buy the news, the rumor has to do with how do I put it? So there's different groups of people, right? You have the general market, who is not very in the know about any particular events, right? Then you have the investors, right? That are still not necessarily they're not necessarily insiders on that company, but they are very up to speed on the news. You know, these are the people with the Bloomberg terminals that are getting the live data feeds about a lot of fundamental events, right? And then you have the people that are truly the insiders in the companies, right? The general, they will learn about events in reverse order. So the people in the company will learn about it first, right? The investors will learn about it after that, and that's when you're going to see the buy the rumor, sell the news, that event happen. And then the general public will generally find out about it after the news is published, right? Right. We just have a couple examples on here of like Bitcoin, way back. It feels like way back in 2014, right? We had rumors of China ban, price was driven down. The ban actually happens here, and then we buy the news after we've sold the rumor, right? So we priced in that loss, and then once the uncertainty of the event passed, in other words, the event had occurred, we see the price come back up, right? All right, so that's news events, macro news events. Important to note, because these are areas, because fundamental events, because liquidity events in general, right? This applies to all liquidity events, not just news events. Because liquidity events are areas of such volatility, it cannot be strongly stated enough. We do not recommend putting on positions leading into or right in the midst of those liquidity events, right? As a general rule, we recommend do not put any positions on for like an hour leading up to the event or an hour after the event has occurred for any of these liquidity events, right? If you already have a position on, you're already got your stop management in place, that's fine. You don't necessarily have to take your position off because we're leading into a liquidity event, particularly for longer duration trades, right? If you're doing swing trades or if you're doing like daily or weekly based trades, you're going to span several liquidity events, right? You don't necessarily need to take it off there, but the key part is you want to discount to a certain extent the information you get during that liquidity event, right? Because prices can go all over the place. So an M that comes in within the first 15 minutes, half hour of a liquidity event is not necessarily, doesn't have the value to you that an M that comes in outside of those high liquidity moments does, right? All right. And then kill zones. Now, kill zones we talk about a lot because they occur daily, right? We have these different regions of the world. We've got kill zones essentially are when the market opens for a given uh, exchange, right? So we have exchanges in each of these countries. Not every country has an exchange, but they're kind of spaced all around the globe. Um, we combine several into what we call the institutional session, which is basically um, from Australia's market opening through through China's market opening. Uh, we also talk about that as the Asian kill zone, right? Primarily, what we're looking at is the Tokyo market open, but you have these other points, in Australia opens um, and Hong Kong market opens, right? They all are still little blips of higher liquidity, but the primary liquidity is when the Tokyo exchange opens up. The institutional session often will show us what we expect from the rest of the day, right? Uh, Not always, and we'll talk about that in a minute, but generally speaking, that's what we look to the institutional session for. And then we have the European session, right? This is where the Forex market is largely centered. This is the London kill zone, right? Based out of the London market. Um, and it's pretty important that as a trader you identify what time these are relative to your location. So I'm on the west coast of the U.S., so the London kill zone occurs about midnight my time, and the North American market, which is in New York, opens at 9 a.m. New York, so that's about 6 a.m. my time. Right. So it's important to understand when these occur relative to your location, right? Something that can help with that, if you go to the market24hourclock.com, they've got a clock with all of the markets listed on it, so you can see when they occur. And so this is right now set on UTC -8, which is my time zone, right? You can obviously change that, so I'm just going here, and then you can change the time zone that you're talking about. So, there we go. Now, the reason for these market openings being such high points of liquidity is there's a few things. Obviously, people are just getting to work. They're placing their orders, right? For a lot of institutional desks, most of their ordering is done in the first couple hours of the day. They come in, they do a couple hours work, and I mean, it's a tough life. Then they go home, right? Well, not really. They fart around, but for the most part, their work's done in the first couple hours. Margin calls are going to occur. That's when people have traded on leverage and they've gotten margin called on their position, which means they need to provide the funds for it, and that often means selling other assets that they're holding. Margin calls can drive a lot of liquidity into a lot of different markets, right? There's an old phrase, if you can't sell what you want to sell, you sell what you can sell, right? That has to do with margin calls and paying for those. News dissemination, right? The news comes out. It's more or less targeted around those events for news. So if you're looking at like the London Times, a lot of their information comes out, around 9 a.m. London, right? Same thing when you're talking about New York. That's been pushing earlier and earlier over the years, right? With everybody wants to get the news first, right? And so there's a drive for that. But news dissemination that largely occurs surrounding these market openings, largely because the news comes out and then it sits there. And when they read it is when people are getting into work, right? They're getting started with the day. And then of course you have your day traders. Day traders, can only keep positions open during their market hours, so they have to square those positions by the end of their respective trading days, which is, of course, that laps into when the beginning of the next trading window is. So the day traders squaring their positions means that That drives yet more liquidity on the market. The end result is the liquidity at these points, because of margin calls, news dissemination, and day trading, is very, very high, right? You will see if you're watching the market, um, at the London kill zone, at the New York kill zone, um, you will see the prices of assets move wildly during those time periods, right? Relative to how much they're moving during the rest of the day. So, to summarize, liquidity events give the big boys the window to put positions on in size, so they don't get caught by them, right? This is when the big ships are turning, right? Um, don't put on a position heading into a liquidity event, right? Couple your analysis with kill zones and let moves into those zones set up your trades. In other words, while I did say we do discount some of that, we will also take advantage of that, right? If you're setting up a trade and you're like waiting for it to dip down to a certain level, right, and put some kind of price point in, very often you can set your buy order at the level that you want to buy at, and then wait for the liquidity event when price will go a little crazy to come down and fill you, right? But we don't want to set up that trade based on the information leading into that event, and we specifically want to take advantage of that, right? And never ever trust the first hour of any trading session, right? And this includes the first hour after a big fundamental event, right? The first hour after news events come out is equally very suspect, right? Right after an earnings report, you'll see the value of that asset move around quite a bit, and you can't trust that first hour, right? And especially you can't trust the first hour of session openings. So again, when used in conjunction with location from fib levels, volume profile, for instance, which you will learn in later sessions, for you guys, we would look at like the Willie and MACD, right? When you combine those, kill zones can be the final ingredient in tricking a trade setup. That can give you the timing for when you're going to enter. All right. That is the lecture. Let's take a look at the quiz, which I thought I had up. Maybe I closed that. Bear with me. Dashboard. Week 11 is what I want. All right. Come down here and there we go. Retake the quiz. Let's see if there's any. All right. There are how many kill zones we must be aware of on a daily basis. Like I said, we group these Asian kill zones together into one Asian kill zone, the institutional session. So there are 3 kill zones we need to be aware of on a daily basis. There are 3 time frames that you really want to know when those occur in your local time zone. That's when the Tokyo market opens, so basically 9 a.m. Tokyo, 9 a.m. London for the London kill zone, and 9 a.m. New York for the New York kill zone. And why are liquidity events important to small traders? And that is, they let the small traders know when the bigger players may be entering or exiting the market, right? Volume indication, volume analysis with OBV and volume impetus can be pretty strong right here, okay? It does not give the small trader an opportunity to get on the big trade. We don't want to get caught up in that, right? So we do not look for trades leading into this. And they do not give the small trader the opportunity to buy or sell the top or bottom of the market. We are not interested in buying the top or bottom of the market. We would love for the big whales to put in that top and bottom, and then we'll get in when the trade is optimal for us, right? All right. Other than kill zones, name another type of liquidity event. All right. And this is really all of the above. Interest rate decisions, definitely. Earnings reports, absolutely. New product launches, for sure. And challenges to the board of directors. These are all big events, right? So interest rate decisions is a macro event. Earnings reports, micro event. New product launches is a micro event. Challenges to the board of directors, micro event, right? These three have to do with a particular company. This has to do with the market at large. And then, is it advisable to put on a new position heading into a liquidity event? Absolutely not. A position that was already open, that you're riding for a long time, that's fine. Just make sure your stops are where they need to be. But we do not want to put positions on heading into a liquidity event. And is it acceptable to hunt a trade setup through or following a liquidity event? And this is an important distinction. Yes, it is absolutely acceptable to hunt a trade setup at, through, or following a liquidity event. But we want to make sure that when we do our analysis, we that setup spans that time. In other words, we don't want to just look at the actions during the liquidity event, because that information is a bit suspect, right? Because of the high volumes of getting out of positions and moving around, right? That the signal we get during the liquidity event is very often a false signal in and of itself. But if it corresponds with what we've seen leading into and coming out past that liquidity event, then that's fine, right? And then, what is your number one job as a trader? And this one's really important, and that is make sure you can come back and play the game tomorrow, right? Some of the rest of these are jobs we have as traders, but the number one job is make sure you can come back and play the game tomorrow. Control your risk. That is absolutely critical. And that is your number one job. And then, true or false, liquidity in financial markets, characterized by a high level of trading activity, is meant to increase the difficulty to buy or sell an asset and drive an asset's price in a certain direction. That is false. It is not meant to increase the difficulty to buy or sell an asset. It does quite the opposite. It decreases the difficulty to buy or sell an asset. And then, what does DOM stand for? Brian, I think, talks about this bit in the video, but it's not on the slide deck. That is depth of market. Okay, it represents the list of bid prices and ask prices on an asset. You'll see this in a lot of like exchanges. If you're on BitMEX, or if you're on Bittrex, if you're looking at this particular exchange, they'll often show on the right-hand side, you'll see different price levels, and you'll see bars that come across that will show you the respective amount of bid prices and ask prices, the volume of those prices, volume of orders at that given price level. Okay, so that's depth of market. And then complete the following sentence as it pertains to a pattern of investors on a negative fundamental news event, right? On a negative news event, we're expecting the price ultimately to go down because of the event, right? We're going to buy the rumor and sell the news. No. Ha ha ha. Sell the rumor, buy the news, right? Think about what we're talking about. Hope somebody caught that. All right, so if we are expecting a big fundamental event, right, what's going to happen? We're expecting the price to go down. So what will happen, if I can find my cursor here, there we go. We will see buy the rumor, sell the news, right? If we are seeing the opposite, we're going to see sell the rumor, buy the news, right? Hopefully that makes sense to you guys. You guys paying attention? Nobody even said anything in chat. I was hoping. All right. So on a negative fundamental event, we expect them to sell the news event. In other words, we're going to price in that negative move, right? And then we're going to buy the news. Come on, guys. Be with me here. Let's try this again. Complete the following sentence. As it pertains to pattern investors on a positive event, we're going to do what to the rumor and do what to the news. All right. Positive event, we're expecting it to go up. So when we price that in, we're going to buy the rumor, sell the news. All right. Does that make sense? Okay. Good. All right. In the financial markets, the regional zone starting from Auckland, so New Zealand, to Sydney, I said Australia, but to Sydney, Australia, to Tokyo, and including Shanghai, Singapore, and Hong Kong, is known as what? All right, so that's the Asian kill zone, but that's not what we're looking for. We're looking for institutional session. The institutional session, because that's what where we're getting an idea of what the rest of the day is going to be. Remember, this is the beginning of the day for the market. And then finish the sentence. In general, and this is actually a really good takeaway for you guys, right? You'll hear Brian and Thomas talk about this quite a bit, right, in the daily briefs. In general, 70 to 80% of all weekly market pivots are established through the Tuesday and Wednesday which kill zone? This is the London kill zone, right? The Forex market kill zone. Though, obviously it applies to other markets as well. It's the London Stock Exchange carries quite a bit, right? 70 to 80% of weekly market pivots are established at the Tuesday and Wednesday London kill zone. And which exchange opening events affect liquidity during each of the regional kill zones, right? We talked about some of this. Margin calls, for sure. News dissemination, for sure. Day traders, for sure. So all of the above, right? We have the liquidity that we see at exchange opening events, right? Those kill zones are driven by these three factors primarily, right? Margin calls, news dissemination, and day traders. Specifically, day traders squaring up their positions, but yeah. And then, true or false, it is best to take a trade in the first hour of a trading session. False. We do not want to take a trade in the first hour of a trading session. We want to give that time to settle down, and then we can put our positions on. And this one you probably will not have answered correctly, but maybe, perhaps you have. My favorite music band and/or musical artist is Great Big Sea, band out of up here in Canada, in fact. Love them. Great energy, really positive. Talk about PMA, man. These guys are great. So that may be on the final exam. We'll see. All right. So there's a quiz. Okay. Any questions about the Forex pivot? Yeah, that Tammy, it is pretty wild to watch too. It comes up so frequently, right? That Tuesday, Wednesday London kill zone, is super powerful. If we're expecting a reversal, and it's just the market's just kind of like futzing around, not quite making the reversal, that's the time frame we'll look to see that in, right? Here, if we're in the States, or I'm not sure about Canada, but I think it's the same thing. Generally, we can't really trade in the midst of that session, but we can look to that session. So like when I get up in the morning, one of the first things I do is I look at how did the market behave on the assets that I'm watching. How did it behave during that London kill zone, right? Because the time when I can trade starts with the New York kill zone. So, all right. Q&A questions. Week 11. We're almost through the course, guys. And I talked about this when we first started the course. It's important to understand when you get done with level 1, you've got the tools, right, in your tool belt to trade successfully. Now you have to put that into practice. You've got to do the paper trades. You've got to become comfortable with the setups and implement that. And that may take a few months for some of you. So if you're coming away from this, as long as you understand all of the tools and how they work, you're in a great position. But you may still, and many people don't feel yet comfortable with it, and they're like, oh, but I'm not ready yet. That's perfectly normal. You need to practice this for a while, right? It may take you a couple months to get really comfortable with all of this and put it into practice using money, right? I absolutely can't recommend enough. Make sure that you're doing your paper trades. Make sure that your paper trading is getting at least a 66% return rate before you start trading real money with those particular setups. Okay. All right. Questions related to the current week's theme. Besides a daily kill zone, is there a weekly kill zone, or is the London kill zone on Tuesday, Wednesday of the week? Yeah, I would say the London kill zone on Tuesday, Wednesday is the closest thing we have to a weekly kill zone. Outside of that, we do have events that occur like quarterly when we're talking about earnings reports. We have futures expiries, right? So weekly futures expire typically on Fridays, and then the third Friday of each month is when we see the highest liquidity in those futures expiries, and then quarterly expiries occur as well. Obviously, each quarter, those are times of really, really high liquidity events. There's a thing. What is the name of that? They got this really goofy name for it. Quadruple witching hour, I think is what it is. Yeah. So the quadruple witching, it's such a weird name, is when we see stock futures, stock index options, stock options, and single stock futures all expire at the same time, right? This occurs fairly with a regularity, right? So we know when it's going to happen. But events like that are extremely high liquidity, right? You can search on Investopedia and see the quadruple witchings, but the short version. Let me kind of type the list out here for you. We have weekly futures expiries, weekly options expiries, both on Fridays. We have, and then I know you asked about weeklies, but we also have quarterly options and futures expiry, quarterly earnings reports. And there's a lot. There's a lot of different things that fundamental events that can come up, right? There are also things that occur with less regularity. Bitcoin has a halvening, right? Every set number of blocks that get produced in Bitcoin, the block rewards halve, right? And that's a really big fundamental event. I want to say the next one we have slated is in, I want to say 2020, but I could be wrong. So if somebody knows. Yep, triple and quadruple witching. Yep. All right. So off-topic questions. Is there a difference between a double bottom and a W? So a W is how we describe a double bottom, right? So no, there's not necessarily a difference between the two things. When we say a double bottom, we're talking about a W. When there is an obvious M or W in MACD, either on positive or negative side, close together, it's easy to see. Can you please demonstrate how to find and draw on either an M or W which is either far apart or doesn't cross the W line or zero line, and also when the M or W does cross the zero line? I'm really hard time to get my head around finding these. Sure. Let's take a look. So a W. Come to here. Oh, come on. There we go. All right, I'm going to use the polygon tool so I can show you kind of what I'm looking at here. All right, so W's that occur below the zero line. So this is my zero line here, right? And then we have price. Come here. Price count. What are you doing? Killing me. Let's try this again. Let price come down here, up here, down here. Oh, what are you doing? Bear with me here just a second, guys. Every once in a while, my synapse freaks out. Let's see if we can try this one more time. Got a Razer mouse, and the software for it sometimes gets a little crazy. So, all right, well, I'm leaving that there for right now. So, can you see how when we cross this line, we make a W, right? The W is confirmed here, but the zero line's way up here, right? So here's an example of that. Hopefully that makes sense to you there. Now let me find one that crosses the line. Come on. All right. Well, let's look at this M. So can you see how this M is confirmed here? In this case, we came up above the zero line, and then it was confirmed down below the zero line, so we're crossing that. I don't know if whomever pushed the question is on, but if you, hopefully this makes sense to you. That's what we're looking at. You can also see a smaller M occur here that is above the line. It's not the strongest M in the world, right? But nonetheless, it is an M. All right. Hopefully those examples give you some clarity. In fact, let me redraw this on here, and I will post this onto that question. Come here. Okay. Okay. Hopefully that provides you some clarity. All right. Is the area below the reload zone also a good buying zone, or does it need to be within the reload zone itself? So I've talked a little bit about how I feel about this, but let me provide a little more clarity. So let's go to a weekly just so we can see this a little better. All right. So we've got this reload zone here, right, on Bitcoin. Here to here, we've got this reload zone. And ideally, we would see the structure come in within this reload zone. Below this reload zone is not bad, and I think it's still really positive until we get beyond that one line. Once we break below this level here, we start making new lows, Then we get into this area where I will consider it sufficient location for a reversal, but it's not good location, right? We don't have a really good uh, knowledge of when we're going to bottom out on it, right? What we're describing with this reload zone is likely areas of a bottom being established. I also like, there are some trading setups that involve coming down to the 88.6 level here, and so I like this level as well. But in terms of just Fibonacci retracement location, anything beyond this, right? Certainly anything beyond the 1.0 level, in other words, a full move below where you've established your previous lows, becomes questionable, right? Um, we just don't know when a bottom's going to come in. We don't know if that's part of a larger downward pattern. So I will consider that sufficient. I'll move on to my next category, but when it comes to like how I manage my trades, where I add a percentage as each strong condition comes in, this would never below 88.6 would never be a strong location for me. I would move on to the next thing without adding any percentage risk to my position. Okay. Can you go over using fib extensions to determine profit-taking levels again? All right. So, oh, good, and Tammy, you're on. All right, perfect. All right, so extension levels for profit-taking. I'll be honest, I don't use as frequently as I do using a reverse back to a previous fib, but where it becomes really strong is, let's say, let me find another asset here that we can use. Let's look at the dollar. Okay. So with the US dollar, right, we will often see moves where we have come, it's driving me nuts. Sorry, guys. Where we've come down, so we have an upside target objective, right? And let's look at, I'm going to look at this on a daily, so I can show you some previous historical movement, right? So let's say we were back here. Okay. So I'm back in time a little bit here. And we are looking at, say an ABCD level, right? Let's say we looked at a bot. I don't know what bot actually came in here, but let's see. Yeah, I don't think it did. I think a bot's probably the best example to show you. Where did I trade a bot recently? Hold with me for just a second. I'll see if I can't find you a halfway decent bot that I can show you. It's not there. No. Nothing in here. That's all my macro stuff. No. Yeah, I don't think we're gonna find any in there. Let me go back to SPY. Okay, so it's not a 38%. I'm just trying to find you a good location where we had a bot trade so I can show you what we're talking about. All right, so like in here, let's come back to this point. All right, so let's look here. So this is a halfway decent bot retracement, I believe. I guess it did dip a little too low. about, and we came up here. Dang. Sorry, I'm having a hard time finding you a good example here. Let me look at our chart here. I'm sure somebody's got a bot that they found. Let's see how their bot panned out. This is the British pound to US dollar. Okay, yeah. Let's look at that. So that way we're doubling up here. Okay, so this is a Forex trade. This person found a bot setup on, what's your scale here? Daily, started in May. All right, daily. Yeah, that looks pretty good. Okay, so yeah, there we go. All right, so we got this bot retracement. We've come back above 33%, but less than 66%, right? There we go. High, come here, high, and lower high here. Now with a bot, I'm going to do this a little quick and dirty here just because it's, where's my tool? There we go there. All right. I'm using this other tool. There's a trend-based extension tool that you can use to quickly draw your kind of bot levels, right? So we have a bot extension, which is a ABCD pattern, right? Where we had the A, B, and then C, D, right? Now, when we look at this bot, we can also look at the extensions off that original move. And this is pretty common, which is why I wanted to grab a bot for you, to see these values, the 1.618 extension off of this range, line up pretty closely, not exactly, but pretty closely, with the ABCD extension off of this that we use for this bot, right? This area in here becomes a really strong window for our target because we have both the ABCD pattern and the extensions here, right? Now, when you're doing a continuation, I have a as yet unvetted setup, so I'm not going to give you all the details on it because I don't want you guys to start using it until at least I've vetted it fully. But I've got a version of the bot that instead of doing an ABCD uses harmonic extensions out to 1.618. I've only gotten through about 70 of those trades, 68 of those trades. So that's a possibility, but we don't really have any setups in TRI where we use that as our primary targeting point. For the most part, what we would instead be using is like a retracement off of this big move up, right? And really, we'd be looking for something even longer. I don't know that we've been lower than this, though. So this is a good example where we need something like confirmation with the fib extension level to give us confidence in this trade, right? Hopefully that helps a little bit, Tammy. I know that's it becomes a little unclear because we don't have any setups that specifically use the harmonic extensions that yet for you to learn. When you get into more involved harmonic trading, that's like level 2 or 3. I think it's level 3 where we really get into harmonic trading. It'll become more relevant.
it's not that it's not relevant now, but I would use it primarily as if you have a setup, look at the extension, try to see if your exit target corresponds with some of these levels, and that'll give you a little higher level of confidence that that's likely. Whereas, like, if the 1.618 were here, but the ABCD took us down to like the middle of this level, I might doubt my ABCD pattern a bit, right? And I might be saying, well, that's kind of in between these two levels, and that's kind of a weird exit point, right? Whereas if the ABCD took me all the way down to the 2.0, right? Well, it wouldn't be a bot then, but I might, I might feel more confident about my target if it took me down to this level, as opposed to, like in the middle in between these extension levels. Hopefully that helps a little bit. The extensions are not something you're going to, in all likelihood, be using a whole lot with just level 1 material, right? We presented it's important to know it, but really where it comes into play is getting more into the harmonic trading, which you're going to learn later on. Okay. In case not passing the exam, is there a chance to do it again? Do we need to take the course over? Do we need to pay for the course again? That's really a question for Julian, but I'll make sure Julian takes some time to respond to this as well, or at least I'll ask him to. I can't make him do anything, but I will ask him. I hear Brian talk about long wicks and tails. Can you explain their significance and why we have to revisit those price levels? Well, so when we see price move in a certain direction and give us a wick, let me go back to BTC. Right? When we see a wick come up, right? That means price moved into here during the session, but didn't close here, right? It closed below this point, and it's not that those are open orders per se when we see a tail and a wick, right? But typically, when price didn't close up there, that means there were orders all the way up to here, and then orders drove this back down out of there, and it did leave some sellers trapped, right? So in this area where this wick is, right, we've got people that placed orders because price was moving up, right? And then price moved away from those orders. And they will often just hang on to those sell orders, right? They bought and they want to sell at this price, and they will leave them there for some time. And so it can take a while for that to resolve, but that's where we talk about how wicks and tails like to be eaten. We have orders sitting out here waiting to be filled. We know that there were sellers that were willing to sell at this level. And so people that can drive the price will likely drive the price up to those levels so that those wicks and tails can be eaten again, right? It's just a common occurrence that we'll see. Now, it can take a little while for a wick and tail to be eaten, or it can happen pretty quickly, right? This on a daily chart, we left this tail here, right? Came back up. We could all see, okay, well, this big tail, it's gonna need to be eaten, right? And so we knew price was going to come down here again at some point. So when we saw heaviness in it, that becomes a really logical profit-taking area, right? Because we know price is going to come down and fill this. All right. Can you go over a dead cat bounce, please? Same as a swing failure. I'm not familiar with the term swing failure, so I can't tell you if it's the same as that. But when we're talking about dead cat bounce, often we will see a retest of that first stop, right? So when we sorry, I apologize for my frustration. This mouse is driving me nuts. Hold on. So come down here. And let's go to a bearish. Okay. We will often see, after a big move down, a bounce up to retest this 38.2 level. It's very common, right? It's where we get setups like the bot and things like that. When we're talking about a dead cat bounce, we're talking about this move back up into this kind of first stop area. And if it's a dead cat bounce, it'll just come up, hit tag that, and then fall out of bed again, right? More or less what we did here, though I wouldn't say we fell out of bed there. Right now, it kind of feels like we're falling out of bed, though, way down here, right? So kind of bounced up here and then came on down, right? So that's what we're talking about. We're talking about a dead cat bounce. I apologize for the term. I know it's offensive to a lot of people, my roommates included, right? But what we're talking about here is when we come down really low, we bounce back and retest that first stop level to see if that momentum is going to continue or if we'll get a reversal. But I don't know what the term swing failure means. I don't use that in my parlance very often, so I don't know if that's the same thing. Will we go over how to actually order a trade? What's the process of putting an order in? So that's a tough one to do because everybody's on different exchanges and they're operating in different markets, right? So I could show you how, like I can show you on the paper trade system for TD Ameritrade how I would place an order. But that doesn't really necessarily help you unless you're also using TD Ameritrade. Similarly, with BitMEX, I could show you how you place a BitMEX order, but I don't know that that's really going to be very helpful to you unless you're going to be trading on BitMEX, right? So typically we do not go over this explicitly because it varies too wildly, right? You're just going to need to, if you are on a platform where they have paper trading, fantastic. Then you can go over placing orders on that particular platform, become comfortable with it. If you're on a platform where it does not have paper trading, what I would recommend is placing very, very small orders so you become familiar with the process of placing those orders. Okay. There we go. So Brian has a good example here of BTC doing that right now. There were some trapped bears from previous wicks. Let me bring up his chart here. So we had this previous tail down here. I said wick, but I meant tail. We had these previous tails down here, and we've got to come in and release some of these bear positions, right? So. Yep. And as Brian says, think of Ray Barbecue's insistence that we should wait for 38.2 test, i.e. a dead cat bounce, before making any decisions about trend going forward. Right? Okay. What is position trading? So when we talk about having a trade on, and this is going to be where you see the difference in terminology between margin trading and non-margin trading. Okay, in non-margin trading, you're just buying the asset or selling it, right? You're buying the stock, and then you're selling it at a higher, hopefully at a higher value, right? So you buy and sell orders. When you're talking about margin, you open a long position, which means you are buying futures or forwards contracts on that asset, saying I believe the price is going to go up, and then you sell your long position once it's up there. So long is a bet that the price is going to go up. A short is a bet the price is going to go down, essentially. Okay. When we talk about positions, positions spans both of those, right? So if you have bought stock, or if you have a long position, in both of those cases, if you have bought a long forwards contract, or if you have bought the stock itself, you're considered to be in a long position. You're making a bet that the stock or the asset is going to go up in value, right? So when we say exit your positions, we're saying sell the stock you own or get out of your long positions, or if you're exiting positions just broadly, right, get out of your short positions, right? A position just means that you hold some interest in that asset. Either you own the asset itself or you own some contracts regarding that asset. That's a position. All right. No, Brian, that's great. Not an interruption at all. Um, all right, I have some problems identifying when MACD divergences are confirmed when M's or W's forming on the histogram and go above or below the zero line while forming the structure. So the zero line is not integral to whether an M or W confirms. I think that's where you're getting hung up. Okay, so like earlier when we were looking at structure, right? If I can draw it, if my machine will let me. What are you doing? This is a W. It does not cross the zero line. Okay? But it is a W. Okay? Whether that W confirms when it crosses this level here. Okay, when we get a close that has it crossing this level, that's a confirmed W. I drew this a little bit sloppy, I apologize. It's really at that level. Okay, so that W is confirmed when we cross 101.8110. It doesn't have anything to do, and that's negative 101.8110. It does not, the W or M does not have anything to do with the zero line. Whether it crosses the zero line tells us that it is a stronger or weaker signal, right? Because we're moving from a bearish environment. So like this W here, which is a W by virtue of the structure and not by virtue of it crossing the zero line, but the fact that it comes down and does cross this zero line, so we're moved from a negative sentiment to a positive sentiment, is very strong and increases our confidence in the signal. But whether it's a W or not just has to do with this. Does it come down low, come up to the midpoint, come down low but not lower than this, and then come above this midpoint? That's a W, okay? Doesn't have anything to do with the zero line. So don't get caught up only looking for M's or W's that have to do with the zero line. Just look for your M or W in structure. If it does cross the zero line, then that can be a stronger signal, right? That can give us a little more confidence in it. There we go. And Brian's got an example here as well. This is on Bitcoin. Here's an M, right? This M here, you can see it comes up, down, up, but lower, and then down. That's an M, right? Where it confirms is well below the zero line, right? So don't get caught up thinking it has to finish on the zero line. That is not correct, okay? In fact, most of the time, very rarely are you going to see a W or M that confirms at the zero line. All right. Now that we've completed most of the course, can you go step by step as to one should enter the trade until it is time to take profits? Um, so we walked through a bit of that last week as well, right? Give me just a minute. I want to answer this last question, and then I'll come back to this. I'm happy to do it, but give me just a minute. Let me. Who should take level 2? All right. So anybody who has completed level 1 can take level 2. Timing matters, though. I would recommend that you take some time to become comfortable with your level 1 concepts, right? Um, if you're very comfortable with it and you feel very good about it, feel free. I mean, absolutely take level 2 right away. But how I describe it is when you're sitting down, this is a bit of an allegory, but when you're sitting down to a big meal and you've eaten a fair amount and you're a little bit full, and then you're talking for a while, maybe you have a cup of coffee and you're talking with people, and then you feel like having a little bit more, that's when you do level 2, right? When you feel like you've digested what you've learned in level 1 and you're ready to reach out for a little more. What level 2 is going to give you is some additional tools, and they're really, really good tools, but it's going to give you some additional tools to incorporate into your trading. But it's really important that you first have your trading plan, that you're executing on it, that you are comfortable with the concept of vetting a setup before you implement it, right? Because as you incorporate these other ideas from level 2, you would need to re-vet your setup that now uses these other concepts, right? So it's really important that you embrace and understand that process that you learned in level 1 before you move on to level 2. For me personally, I moved straight into level 2 right away, and like halfway through that, I had a bunch of stuff going on in the rest of my non-trading life as well. But I mean, also I got a little overwhelmed because I'm in the middle of trying to vet this stuff and I'm getting comfortable with it, and so I ended up dropping out of level 2, and I took it all over. I took level 2 over again, right? A little while later, after I'd had time to really digest and process my level 1 material. Um, so so it's not a bad idea to take some time to really become comfortable with level 1 and the process that we've taught you before you take level 2. Now that being said, some of you, I know with a fact, some of you are totally comfortable with what we've learned in level 1. You're ready to move on to level 2. You want some more material, right? Don't. That's fine, right? But just understand that when you take level 2, it builds on the material that we've taught you in level 1, right? So you really need to be comfortable with level 1 first, okay? All right. Can you go step by step as to how one should enter the trade until it's time to take profits? Okay, so let's walk through some setups really quick. And in fact, let me go through the trading log. I'll see if I can't walk through some of these that are good setups and show you step by step how we would go through that process. Okay. And if we don't get it through these, then I'll see if I can't hunt one for us. So let's take a look at some of these. All right. So what's the setup we're looking for here? Not sure what setup we're looking for here. Let's see if we can derive it. So we had this move down. This looks like an L-tanganator, right? We're looking to take profits at the 50% level. So location-wise, we've got a good risk-to-reward ratio up to the 50%. That's okay for location. It's on Ethereum. Oh, that's a very good question. Okay, so let me interrupt myself for a second and answer this. Adam, you will still have access to your level of material after the course is over. The course material, so the stuff that's on Thinkific, is somewhat limited. So I believe that Julian has looked at that being still open to you guys for 90 days, I think is the time frame. My review videos that I do, the group tutorial videos I do, I will keep up and available to you guys for as long as I can, right? At some point, the YouTube's going to tell me, I've used too much space and I got to take some stuff down, and that'll come down. But I don't have any plans on removing these videos. I do have local recordings of them as well, so um, when I do have to finally take these offline, if people still need access to them or want access to them, I'm happy to provide them through some other channel. But yeah, the group tutorials will be available to you indefinitely. The course material, I want to say 90 days. I should confirm that with Julian, but I want to say 90 days, so it'll still be available to you. The alumni channel for everyone who's taking a course but not in the course right now. I think in general we mostly use the lounge for that, and we can talk to Julian about it, but I'm a little hesitant to add another split off channel for people that have taken the course. For one, I really feel like part of the thing that I like about TRI personally is that we've learned this material and then we share it with the other members on the site, right? Whether they've taken the course or not. There are some areas like when we get into options, I'm not super comfortable with giving option setups to people that don't know how to use them because they can get themselves in trouble pretty quickly. But in general, I think the lounge is a pretty good resource. You can see that we're tagged as well. We have indicators on our icon that tells whether we've done level 1, 2, or 3, right? So I don't know that. I'm just a little worried about an alumni channel splintering off sections of the community, right? So I don't know. We can talk to Julian about it. All right, walking through things. That's what I was doing. Okay, so we're looking at here. That was from earlier. Ethereum BTC. Okay, so came down here. Do we have divergence? Looks like we had some confirmed divergence up here. Then we came down a little lower. Looks like a little W here. I think it would be useful to you guys if you're posting your charts to put your reasons down, like write them onto your chart itself. Because, like for instance, when I'm looking at this, I'm kind of making a lot of assumptions about what they went off of, right? So I'm like, okay, location looks okay. Let me bring up ETH BTC. I don't know if that's on Bittrex or not. Coinbase. Okay. So let's try that again. ETH BTC Coinbase. All right. And when was this? This is on the 4-hour. Okay. All right. So I think this is off the same structure here. October 5th. Yeah, it looks like it. Okay. All right, so let me redraw this. And so I'll walk you through my process here as well, if, my mouse will let me. Okay. So to begin with, I look back in time to when we've previously had some movement through here, right? So I can come down here. All right. So this previous move up. I went backwards, didn't it? Bear with me. Man, you're making me crazy. That's what I'm looking for here. Sorry, my fibs drew backwards because which one I So this previous move up here. Let's draw some reload zone. All right. So our previous higher time frame reload zone there. And we came down here. I want to say you were back here when you drew this. All right, so we're below this reload zone. So that's okay. And then we also have right before this. So let me replay back to the level he's at, which I think is right here. Yep. All right. So, really? Okay. So we have this move down, and then we look for some kind of divergence, right? We're making lower lows here. Lower lows here. That was as of 15th. Here we've got higher lows here. Now, for higher lows, right, we want to, ideally, for me, have some kind of W in place. So that means we're coming down to here, moving up to here. We really need a break of that high, right, which we don't get until this candle. Oh, come on. All right, so we got that here, right, on this candle. Apologize for a little bit of sloppiness, but I'm dealing with mouse issues. So we didn't get that confirmation until this candle here, right? But we did see this building. Now, we've also got a W in OBV crossing the EMA, right? Do we have bull, bull, and then bull, right? So we do make our higher highs. So we do have confirmation of that. So we have confirmed OBV. Willie, we came down. We did get stupid in here. And then we made a W crossing that. So Willie's good too. In terms of our buy signal, so we've got a nice W here as well, right? So this looks pretty good, right? The problem we have is where do we enter, right? Now, as I've talked about before, for me, I look to enter at the candle body low of the candle confirming the W. So I would have put my bid here. Again, I'm kind of a cheap ass. Some people would have used other entry mechanisms. You might have drawn a fib off this overall candle and entered it like a 50% retracement or perhaps a mountain man. So I would look to enter on this at this point on subsequent candles. So I would have placed that order after the 4 hour here closed. Place that there. We'll look to take profits here, right? Let's see how that played out. All right, so it came down. Looks like I would have gotten my fill, and we would currently we would come up a bit, and then we would come back. So we'd currently be at that level. Now, for me, I also make use of the and Brian's talked about this a lot. He's adopted this as well. I make use of the bot stop management rules for all my trades, right? So come up to here. Let me change this to bot and widen that up a bit. So given that, I actually might have stopped out already, okay? Because when we came up and we hit this 50% level, I would set my stop to my, let me expand this up a bit, see if we can see whether it actually went down there. I would set my stop to the point where I took my entry in, all right? Looks like we didn't quite get there. So I would technically be still in this trade, but my stop would be at 0.02849. Okay, right here. So if we move down any further than where this went, right? We came down to here, we almost stopped out. If we come down to here, we will have stopped. There we go. Make sure this is all tightened up and correct. Bear with me here a second, guys. Oh no, look at this tail here. So I would have gotten in here, right, on this candle. Then we would have come down here, finished up here, gone all the way up to not quite 50%, but then the tail on this actually extends below my stop. The tail on this comes down to here. So I would have gotten stopped out right here. Okay? So that's how that order would have gone, right? If we hadn't have come down here, I would still be in it, but as it stands, I would have stopped out on this candle. And then next bust in 10 minutes, right? Okay. Hopefully that helps a little bit, guys. I don't want to take it. Hopefully this is helpful to you guys. Please post in here if this is something that you'd like to like me to keep doing here for you. I'm kind of walking through in some somewhat meticulous detail. So this person, I'm not sure where you got in on your trade exactly. I guess I can look on the chart on the table. You got in at 105.5. Your stop is at 105.5547. Am I looking at the wrong thing? 105. Oh, I moused up to the wrong thing. Sorry. Ethereum BTC. So you got in at 2889. Your stop is at 2816. Yeah, so you would have gotten stopped out as well when that came down here. Yep. $2,889. So I'm guessing that you looked at having an order at whenever this broke, right? So it looks like this person got in here, and they got stopped out as well when we hit this level. So So not a bad trade. I mean, I would have taken it, right? You had your reasons were all in place, though. Again, I would recommend writing your reasons out on the board, right? What's your location reason? What's your momentum reason? What's your structure reason, right? Write them on the chart itself. That way, when you go back to them, you can clearly see why you got into it. Yeah, yeah. So, uh, Brian and Alex are talking here. This is very very important stuff for you guys to pick up on. This is really really huge, right? Um, you want to do anything you can to reduce your anxiety in your trades, right? At the end of the day, we're paid to worry, right? As traders, we have a lot of anxiety, which is just part of the course. What we want to do is anything we can do to reduce that anxiety, right? If we can get to where we're at such a level of anxiety we hardly feel it, great. That's fantastic trading. That means we're going to trade methodically and systematically every time, right? Because at the end of the day, we are winning over time, right? Each individual trade we may win or lose, but as long as we are winning 66% of the time, as long as we are winning twice as much as we lose when we lose, we're going to come out ahead. But that's over time. The more trades we do, the more we approach that statistical mean. Um, but that means we need to trade very consistently, right? And that entails, by its nature, a lot of anxiety. So we want to reduce that as much as possible. All right, let's take a look at some more of these. We got here. This is a bot trade by Johnny. I don't know which one I opened up now. Hold on a second. Let me reopen that. Here we go. BTC USD. Ooh, you took the short bot. Nice. This was on the hourly. So we came down to here. Came back up above 33%. I probably would have, at this level when you made the new lows, I probably would have moved my my fibs down to here, right? Because when you made new lows off of here, it just it's a little bit messy, right? That's not really what we're looking for with a bot. So let me bring this up so I can show it to you. This is on Coinbase, BTC USD. Okay, this is on the hourly. When was this? I don't know what day this was. When was the trade placed? 11/23. Okay. So 23. Is this the one we're talking about here? Oh man, you're making me nuts. Alright, let's try with this mouse. So each time this goes lower with the bot setup, right, we're making new lows before we confirm in. I kind of feel like we need to redraw this, right? So, because if you came in here originally, right, and came off of like this, which I think was where we did it. I think I'm in the wrong location for the setup that you did. I feel like it was back here. Let's see if I can figure this out. we had really down here. Is that all the way back here? I think that was here. Yeah, that must have been here. So we had Willie embedded there. Yeah. Okay. So that's in the wrong location. Alright, so we coming off of here. Coming down. Alright. Once we made this newer low here, I kind of feel like that reset the water, right? Because what we're looking for is when are we going to break down. So I would have moved my original retracement down when we made the newer low here. Then we're looking for one low, one high, and this high's awfully close to that. I don't think I would have counted that. Right? Two highs. That looks pretty good. Three highs. Okay. So to use my quick and dirty tool really fast. Come down here. Actually, I gotta drag this over a little bit. Come down here. There. And then we need to come up to there. Alright. Now here's part of the problem. We could have gotten in there, right? What I would have looked to do is get in on the break of this M. Now we've already got the three other lows, so I'm good with almost anything to get me in on this trade at this point, right here. We've also got, and this is important for my version of the bot, right? We've got an M here, right? That's giving us some downward pressure that has not been invalidated. And in fact, we come lower here, but we want to get in before that, right? So we've got the location, we've got momentum here, right? I don't know about OBV or Willy, but I don't typically use Willy when it comes to the bot. Then we made this last there, lower high. So really at any point, I might even have placed a blind bid at this level, right? Let me delete this. Right. Let's make this yellow just so it's clear. What the heck? There we go. Color. Yellow. Okay. So I might have even placed a blind bid had I seen this at this 42.39 level, right? Because we already had our three lower highs, and then this would have confirmed our M. Okay. Right after, right here is where it would have filled if I had placed that there. If you wanted to wait until after confirmation, we didn't have confirmation until this candle, and you would have had to be quick on the draw to get in right after that. So I think you would have been best served to do this in retrospect, right, in hindsight. But honestly, I would have been pretty comfortable with that because we already had our well spaced out three lower highs. And so if we took that trade, it would have come down here. We would have gotten past the 50% level. We would have set our stop up to where we entered, right? And then it came back up, has since moved down to the 66% level. That's where I'm going to trail my stop. So what I'm looking for there is I will track my lows as I come down. you could call that. That's kind of aberrant, but one, two. So we haven't gotten a low. We haven't gotten a third lower low yet to move it beyond scratch. So I would still be at scratch even though we were at 66%. Because what I need is successive lower lows. So or lower highs rather. Lower high there. 1, 2, 3. Again, we're still at scratch. If we can put in another lower high here, I would move my stop down to this level. And that's how we would manage that trade. So overall, that looks pretty good. Yeah. The key part that I would say for your trade here is I would have moved this first range down when we made new lower lows. Okay. So hopefully that illustration makes some sense there. Let me just check for questions. Oh, blind bid, Tammy. No, Alex, I'm not really talking about a market order. When I talk about a blind bid, Tammy, what I'm talking about is placing so like when we are looking for structure here, right? We don't yet have the structure. I'm saying if price closes below this level, then I'm happy. If I place a blind bid, anytime price moves to this level, it's going to fill the order, which means it has some inherent extra risk because price could come down, hit that order, and then rebound up, and it didn't actually close below that level, so I didn't actually get the market structure I wanted, right? So it carries some extra risk. I won't typically do blind orders like that unless I have other supporting structures. So like in this case, I have 3 lower highs that are going to defend my trade, and there are some shorter term signals that could have gotten me in here as well after this, right? We had a little fractal that came in here. We have a fractal here, right? Either of those could have gotten me in on the trade, and that would have been fine. I just really like him, so that's what I mean for blind bid. You're putting a limit order in at a particular price when you expect structure to be completed. It's risky. I don't necessarily advocate it unless you have this other structure in place, right? Just to defend your trade. If you have the successive lower highs, then that makes sense to put in that blind bid there. And it's called blind because that's going to fill when I'm not looking at the computer, right? We have this limit order on. As soon as price hits it, it's going to fill. I don't have a way of placing the order so that it only fills if we close below it. In most exchanges, I actually do in the case of Bittrex, but not with Coinbase. Right, Coinbase I can set a limit order; it'll fill as soon as price gets to there. But so it would have filled actually on this candle. To give you the example, let me expand this up so you can see what I'm talking about. The riskiness that's entailed with a blind bid is exemplified here. So it would have filled on this candle, even though we hadn't completed the M structure yet, right? Because I hadn't gone below this tail. That wasn't completed until here. However, because I have this other structure in place, I'm pretty comfortable getting in kind of anywhere below this level, right? As long as I have something to get in with. So in that case, I was comfortable with it. You could also just say, look, as soon as we finish this fractal, we could get in on the next candle entry, which would have been right here. Okay. Yeah. As Brian says, we never ever make market orders, right? There's a number of reasons for that, but we want to pick our level and get our order at that level, right? And a lot of it has to do with just psychology, right? Psychologically, it's a lot better if we place our order and the order comes to us than if we go chasing it, right? Adam, best way to study for the final? The single best thing you can do is go back through each of the weekly exams and retake them, right? That's going to be a bulk of the final. Um, the second thing you can do is make sure that you have your trading plan created, that it's as detailed as you can make it, that you specifically have your plan set up so you have your goals in place in your strategic plan. You have your various steps you're taking, like me making sure I have my shoes on, in your tactical plan. You talk about when you're going to trade and what assets you're going to trade and how you're going to control your anxiety and how you're going to control your behavior, right? That's your tactical portion. And make sure you have your setups written in your own words that you're going to use in the third part of your trading plan. If you have those in place and you've done the exams and are comfortable with the questions on the weekly exams, you're going to do fine. Okay. See if I can do another one of these setups here. We're getting close to time, but I'd like to do a little bit more. Tammy, I'm going to look at your Altanganator here. What's this on? Microsoft. Okay. So we've got our big move up. All right. Um, yeah, it looks like you identified a head and shoulders in here, in fact. Um, got divergence that is confirmed at this level. That looks beautiful on MACD. Got an M on OBV crossing EMA. 1, 2, 3 successively higher bearish bars. That looks great. I like that you wrote your reasons on your chart. That's fantastic. Yeah. Willie leaving a long run of stupid. Yeah, so it was embedded in stupid and failed on the last bar. Yep. Yeah, that looks great. Absolutely fantastic. Taking profit at the 50% retracement. Let me make sure that is correct. 50%. Looks like you went a little lower than the 50%. I guess you did the 2 to 1 is what you're looking for, right? That's fine too. I don't see a lot of problems with doing just a flat 2 to 1 instead of aiming for the 50% level. It still has you in before the Mountain Man. So I think your targeting's fine there. Strict Altanganator, I think, would have you set your take profit at this 50% level. For me to get in on this, again, my cheapskate rules would have me place my order at the candle body high of this candle here. This also assumes that you're using kind of candle bodies instead of wicks. Well, no, I guess you could have gone off there. Yeah, no, that's a proper M. So yeah, I would have put my bid here at the top of this candle body, because I'm a cheapskate, and then I would just take my profit at 50% level. That would probably give me a 2 to 1, maybe a little better. But yeah, that looks good. Let me ask about that. I'm not sure what the deadline is for taking the final. We talked about giving you guys 2 weeks in which to take it from the last class, but let me confirm that with Julian. I know he wanted to extend that out a little bit because he just want to make sure you guys have the best possible opportunity. So let me talk to Julian, and then I will tell you guys either in chat here during the week or next week. Okay. Tell you what, Adam, can you throw that question onto the document for next week under unrelated items, and I will be sure to answer that next week either way. Okay. All right. But yeah, Tammy, this looks good. I like this El Tango on Microsoft. That looks great. That's exactly what we're looking for, right? That was a weekly, wasn't it? Yeah, that was on a weekly too. Yeah, that's strong. Yeah. That looks great. All right, given it's a weekly, let me. I was thinking that was daily when I was looking at it. Given it's a weekly, let me reassess where I would have entered. So instead of going to the candle body high for a weekly, I might do something like this. Let's go off of this overall move down. Change this to yeah, in this case, so I'm looking. So here's what I'm looking at, right? Looking at this overall move down. I don't know. You might get filled up at the top of that, right? We've got this little gap up here that's going to want to get filled. I know you haven't done gaps in level one, but they act kind of like magnets for price, right? Another one up here. Um, yeah, you might look. Just so I drilled down into a daily, right? Um, I think my original thesis holds. I think you could look for placing a bid at the candle body high, which should be around there, I think. Get rid of these other ones and see whether that's correct or if that's a little low. 1 week. Yeah. Yeah, I think you could look at getting filled at the candle body high of the candle that confirmed that M, right? That has you in the reload zone for this move down. Yeah. Never mind. I will not I will unrevise my thesis. Um, and I'd probably put that bid in right there, right? And this is a short, right? So we'd be looking for uh, like a margin short position on futures, or once you've finished your level 3, you might look at something like a put option or something like that. But yeah, that's probably what I would be looking at. That looks great, fantastic, good job. Let's see, we got any other questions? I think we're good. Okay, guys. Spend some time this week. Next week we'll do our overall review, right? Um, the that's what next week is. It's just review of everything, right? Go back through each of these weeks. Go to the exam. You can always take it again, right? Um, go to the quizzes. Just go down here, hit retake these quizzes. Make sure you're comfortable with them. Make sure you've got your trading plan put together. That you've gone through each of those 3 sections I just talked about. That you have a trading journal in place and you understand the need for that trading journal, right? And that you're using it. You also need to journal. It is very, very valuable and very important. Please do it. And that you've got a trading log. Feel free to take a copy of this trading log and make it your own if you like. Feel free to do it in some other manner. I've had students that did their trading journal literally manually, like they kept a physical journal where they wrote down their trades. That's fine too. It's a little harder to calculate your win-loss rate, but it's not beyond the pale. And yeah, ask questions. I'm on vacation, but it's not vacation from this job. I'm on vacation from my regular job, so I have time. Ask me lots of questions this week, okay, guys? Yeah, Tammy, and I will have time to do that. So I will go through, and I'm gonna put some notes in next to each of the trades in the trading log and try to give you guys some good feedback. Um, absolutely. And if you have any particular trades you'd like me to take a look at in that list, um, PM me. Say, hey, can you take a look at this particular trade? I've got time, and this week it aligns perfectly for you guys, right? So make use of it. Ping me, right? PM me, ask me questions. Let's make sure that you guys are in the best possible position moving into next week. All right. Okay, guys. I'm going to wrap up. If anybody have any last minute questions before I do? Going once. Going twice. I'm gonna take time because there's like a 10-second delay here. So, oh, all right, guys. Please, please, please make use of me. All right. If you have any questions at all, please ask them. Don't hesitate. Okay. Uh, I'm really proud of all of you. You've done just a fantastic job absorbing this material. So, all right. You guys have a great week. Um, do lots of trades. Be safe, right? Manage your risk and even your paper risk. And oh wait, there's a question. Yay! Go for it, Adam. You're teasing me, Adam. Come on, man. Give me your question. Is there a way to print out the weekly exams? I don't know. That's a very good question. I suppose you could take screenshots of them. It's kind of a pain. Um, but I don't know of a way to print them out. Yeah. Yeah, I guess you just have to take screenshots as you went through, right? Sorry, kind of a pain, but hey, look at it this way. You'll really drill in the stuff that you already know too. Yeah, I don't know. You just have to play around with it and see if you can get it to print it up for you. I'm looking here. Hang on. Yeah, I think you're just gonna have to do screenshots of the questions. There you go. All right, guys. Have a good rest of your weekend, and bye for now.